Good afternoon. This is Bob Iacchino from Path Trading Partners, along with Mike Arnold, as always, my co-founder. Afternoon Path Chat for Thursday, April 6th, covering the futures markets. We had some jobs data come out today. It was just the initial jobless claims, but it had me looking at some things, and what I found out was part of the reason that we don't have houses on the street bumping up their non-farm payrolls estimate based off of the ADP estimate that we saw is because apparently the March ADP has a really poor correlation to the jobs number, specifically the March. Now, we had a consensus earlier this week of 170, then it went to 177, now it's at 180. That's not that big of a bump up considering how well the ADP did, how much it outperformed its expectations. So the estimate is now at 180,000, but still I'm more concerned with average hourly earnings and with average weekly hours. But seeing that jobless claims number be so far below the average had me thinking that potentially that weather, that snowstorm that we saw on the East Coast earlier in March could have actually had an effect on this number. So we might actually have a decent miss here. We'll see. It doesn't really matter because we trade price action, but just kind of to have an idea of why that may have happened, we might have a substantial miss. And if we have a substantial miss, you could see average hourly earnings and the work week bump up, because if people weren't coming out for interviews because of the weather, that means the existing employees would have to work more, and that would show itself in the hourly earnings and in the work week. We also had some really tough talk out of Secretary of State Rex Tillerson in reference to China, and he said this in front of President Xi at their initial press conference at Mar-a-Lago. President Trump had not arrived yet. He was arriving about an hour later via Air Force One, and Secretary of State Tillerson took a very hard line in the public stance, saying things like, our main and only concern, I'm terrible at quoting people, but I'm good at paraphrasing, or I'm paraphrasing now rather. He was essentially saying our only goal is with the American worker in mind. So it was a little bit of an odd public stance. Usually they're very conciliatory. It's fine for a strategy in private, but it's a little aggressive, I think, in terms of the way that it's going to be viewed by the Chinese media, especially the communist news outlets. We'll see how that comes out, but expect to see drips and drabs of information coming out of that meeting at Mar-a-Lago, and it may actually have more of a lasting effect than the non-farm payrolls number. Remember, we're now looking at the non-farm payrolls number through a lens of a potentially more aggressive Fed in terms of shrinking their balance sheet. A lot of shops are starting to think that they won't shrink the balance sheet and raise rates at the same time, so this may actually slow down the short-term rate hikes. But if they start to adjust the balance sheet, that will speed up the increase of long-term rates. So we will see how that plays out. But in the meantime, again, we trade price action. So let me turn it over to Mike to let you know what he's seeing on the charts. Very important to listen, because we won't be doing a Path Chat tomorrow morning before the non-farm numbers. We'll be recording the Money Path podcast, so we won't be able to do that. But anyway, Mike, it's all yours.
Okay, thank you very much, Bob. So we're going to be reviewing some of the key levels we're going to be watching tomorrow, especially with non-farm payrolls, but these levels also could follow through next week. First in the Dow. Dow's been stuck in this range, popped out of it yesterday to the upside and then fell back into it. So if we break below this trend line tomorrow, we're going to be watching for a key test of this 2525 area in the Dow. If we get a sustained move below that, we'll be watching for a retest of 20,410 to 420 level. Those are going to be very key. If we move up tomorrow, first area of resistance is going to be around the 20,759, but we really need to get through to 20,793, which is really 20,800, before we can look really for a sustained move to the upside, which would take us to this trend line, but really to the defining point of the trend line, which is 2884, is going to be very key. And then on a really big move, we'd be looking for 20,979 to 21,000. On the S&P futures contract, some of the key things we'll be watching for. We have a couple lines in the sand. On a rally tomorrow, we need to get above really the 2366 area before we can test the 2369, and then a magnet price will be right up here, which is a new defining point for this trend line. The defining point is shifted to here, and that defining point is 2375. If we can get above 2375, next level's higher are 2382, followed by 2389. If we move down to get back below this key trend line, going to be watching for the 2336, very significant area in here. On a move below that, we're looking then to 2332, and then possibly all the way down to 2318.50. On the Nasdaq, if we break back down below the 5398 level, we'll then be watching for a 5384 area, and then if that's broken, 5376 to 5367, very key areas lower. On a rally, we really need to get above the 5447, which is going to be the first area of significant resistance, and then we'll look to test 5450. Then there's not much else, the 5450 to 5455 area as resistance, and there's not much else before we get to a retest of the prior highs, which are 5481.25. Let me switch over to crude. Crude tested this significant level again. Let me expand the chart a little. Tested this significant level again and the slightly curving up 50 and rallied hard. We've talked about the 51.66-67 level, which is pretty close to where we closed. We closed today at 51.70. We didn't quite get to this point up here, which was the prior most recent swing high around 51.88. On a rally, 51.88 is going to be resistance tomorrow. Once that's broken, watch for a possible run up to the 52.51 area right in here. If crude pulls back again, you're going to watch for key support right around 51.18, and then back down at that 50.78 level. And once that is broken, we're really looking at 50.60 as possible support. Let's switch over to the metals. Metals, I'll start with copper here. Big rally yesterday, pull back today. Copper, if we can get a sustained move of 269, we're going to watch for a rally up to the 271.71 area, and then we have very significant resistance between 272.34 to 272.74 area. On a further pullback, on a move below the 265.42, we are looking for the 264.31, followed by the 263.43, then possibly all the way back to the 262.40. We really need to get below the 255.96 or above the 271.79 to really define the next direction in copper. Gold, another little day, pulled back slightly. We're really basing near these prior highs. You see these highs from back in February, these highs we set this month. Gold, we need to get above the 1263 or 1264 area before we can make a run. Our next projected levels higher, 1272, then 1281. If we're to pull back, if we get below this trend line, we're watching for key support right around the 1246. If that level's broken, 1244, so you really have to get below the 1244 until we can pull back. Then we have the 1238 and the 1232 area. Finally, silver, also basing slightly below the late February, early March highs. We tried to run up there again a couple days ago. That's going to be a very key level. We've pulled back. So far, the rising rotation zone is supporting it. If we do get below the 1813 level, and especially then below 1810, watch for a possible pullback to 18. And then we have between 1798 and 1803, we have a lot of support. If it gets below there, we're looking down to 1782. On a rally back up, very significant resistance around 1825. Then we can get back up. We might have a minor resistance around the 1837 mark, which is a declining trend line. But really key area is going to be that 1843. If we can get through there, we're looking for a push to 1854, then a big cluster of area right around 1863. That's all we have for you. I'm going to turn it back over to you, Bob.
Thank you very much, Michael. Remember, the next time you're going to hear from us is when the Money Path podcast is released sometime on Saturday after it is all edited. Thanks for watching, and we will speak to you guys in our next Path Chat and through the Money Path podcast. Cheers, guys.